All right, well, hello everyone. My name is Debbie Johnson, and I am your host today for today's home buying webinar brought to you by the Johns Hopkins Federal Credit Union. And we do have some expert speakers today that I think you're going to get a lot of information from. Now is the perfect time at the beginning of the year. It's springtime to lay that foundation, whether you're in the market for home buying now, but we are definitely going to be laying that foundation for you today for the future as well. So let's go ahead and move on here with some housekeeping. So this webinar is going to be recorded, as you can see, and we did include the Q&A, and we're going to be hopefully moving quickly here through our different presentations and we've built in some time at the end for Q&A, especially the general questions that you might have. I would ask that if you have like more personal questions, we're going to give you information on our expert speakers at the end. You'll be able to email them those personal questions. And then as far as, like I said, the videos are off and it is recorded today. So with that being said, I'm going to move on here to our expert speakers. So we have Betty Freert, who is our AVP of Real Estate Lending at the credit union. And Betty has been here for a few years and she knows our credit union products inside and out. And I think you're going to gain a lot of knowledge today on credit union offerings as well as the mortgage process, which is always so interesting. And then we also have Jeremy Hornberger. She is our work-life program specialist at JHU Benefits and Work Life, and she's going to be going over the Live Near Your Work program for those that are able to take advantage of that. So you'll get a better understanding of the offerings through the Live Near Your Work program. And then we also have Mr. Gabriel Dutton, a realtor at Keller Williams Legacy Metropolitan, and he's going to be talking about the need of having your own realtor and the ins and outs of looking for a home and all that goes into that. So again, thank you to our expert speakers, and for time, we're going to go ahead and get started here.
All right, thank you for joining us. What I'm going to do is to try to give you some basic information about what lenders are looking for in terms of qualifying a borrower, and also some of the steps you'll need to take, the opportunities that may be available to you as a home buyer. And as Debbie said, everybody's situation is different. Please feel free to contact any of us with your personal situation. We can provide a little bit more individual guidance as needed. Okay, so the first thing you're going to do if you want to buy is get pre-qualified. And the reason for that is because you need to know how much you can afford before you start hoping and dreaming. If you've been online and you're looking at $600,000 homes, but it turns out you can only afford a $300,000 home, you're going to be very disappointed. So start with the financial side of things first. Figure out what you can afford, what loan type is correct. Gabriel can speak to this too, but pretty much all home sellers at this point want some sort of letter submitted with your offer where a lender is confirming that, hey, you actually have a pretty decent shot of getting this loan. Okay. And it's a pretty fast and easy process. With us, we'll spend 15, 20 minutes on the phone with you. We'll ask you to upload some documents so we can verify income and assets. We'll take a look at your credit. It's not a terribly difficult process. So definitely one of the first things that you want to do. Okay. Now, when I am pre-qualifying someone, okay, and I've been a mortgage underwriter for many, many years, which means I approve mortgage loans, there's a couple of things that we're looking at, okay? I'm looking at your capacity to make the payment. I'm looking at the collateral that's going to secure the loan. And I'm also going to try to get an idea of your character. And by that, I mean in lending terms, the probability that you want to pay us back. Okay. All very important to lenders. Okay, capacity. And there's a couple of things here. The first thing is, how much do you have for your down payment and closing costs? The down payment is the difference between your purchase price and your loan amount, and that's going to vary based on loan program. Usually it's a minimum of 3 to 5% of the purchase price. However, the one good piece of news about this highly competitive market right now is that lenders aren't doing as much business as they'd like. And so we're starting to see lenders um, introducing low and no down payment programs. And we have as well. I'll talk about that in a little bit. All right. In addition to the down payment, you're going to have closing costs, which are the actual costs of buying the property and getting the mortgage. And normally that's about 4 to 5% of the purchase price in Maryland. And money for these can come from savings, gifts from relatives, or grant programs. Okay. Savings also includes loans against 401k and 403b plans. You can use that towards the down payment. Sellers can also contribute money towards your closing costs. We are not really seeing that much these days because it's such a competitive market and so tilted in the seller's favor that they don't need to. But when things swing back around and the pendulum turns more towards a buyer's market, it is fairly common at that point to see sellers making those contributions. The other thing we're going to look at in terms of your capacity or ability to make the payment is what your debt to income ratio is. What monthly payment can you afford? And to calculate that, we're going to take all of your monthly loan and credit card payments, including the proposed mortgage payment, and we're going to add in, alimony, child support, that kind of expenses, and divide it by your monthly pre-tax income. All right, we're not going to include things like utilities and car insurance and those kinds of expenses. Basically, things that are on a credit report or that you have a legal obligation to be paying. And it's very common these days with most lenders that if your debt to income ratio is 45% or lower, you're in good shape. With some loan programs, you can be more around 50, depending on the lender. The one thing I always want to make sure that you understand, though, is just because I tell you that you can afford a monthly payment, that doesn't necessarily mean that you're going to be comfortable with it. There are people who are very, very expert money managers, and they're going to be able to manage that higher payment because they're very frugal in the rest of their lives. Or you might have someone like my daughter who is a big spender and she can't manage as much of a monthly payment. So we don't want to put you in a situation where you've bought the house and now you can't afford to buy curtains. So just make sure that whatever we tell you is a number that you're really comfortable with. Okay, then we're going to look at character. This is our assessment of the probability that you'll pay us back. And we don't know you, but the things that we're going to look at from our standpoint that our discussion or your mortgage application are going to show is, first of all, your credit. Now, score requirements are going to vary depending on the loan program and the lender. Our minimum credit score is 620. Okay. The higher your credit score, the more choices you have when it comes to loan programs, and also the better your rate will be. So if you're in a situation where you're kind of thinking about buying a home in the next 6 months to a year, and you have time to really work on getting that score up as high as possible, that will save you money in the long run. Okay. Any adverse credit event like a bankruptcy or short sale or foreclosure might require you to wait for a certain period of time before you buy. Okay. So you want to check with your lender if that applies to you and make sure that you fit into the box for that. The other thing we're going to look at is income stability. Do you have a demonstrated history of consistently earning enough money to afford a mortgage? Okay. Or have you recently gotten the academic credentials needed for your current employment? You know, if I am looking at a loan for approval and I see someone who has been on their job for 2 years, or maybe they've changed jobs, but there haven't been any gaps in employment and they're kind of progressing in their career, that makes me feel good. If I see someone who's changed jobs 6 times in the last 2 years and there's been a 2-month gap between each job and they're in different fields and they're all entry level, then I don't have that same feeling that the income is going to be stable. Okay. And then is your income likely to continue for the next 3 years? For standard employment, the assumption is that it will. But if, say, you're a graduate student or you have fellowship income or anything like that where there's a defined ending date, we may need to document that it is going to continue for the next 3 years in order to be able to use it. Okay. And just a brief note here, if you are here on a J1 or an F1 visa, okay, you want to be very careful in selecting your lender. We will lend to borrowers on J1 and F1 visas. Other lenders will, but some will not. And we've had a number of credit union members who came to us a week before settlement when they found out and their loan officer found out that, oh, hey, this particular lender's underwriting guidelines exclude J1 and F1 visas. So that's a question to ask up front. And you want to ask your loan officer to verify that with the underwriter because the loan officer does not always know. Okay, now just talking a little bit about our programs. Okay, we offer conventional FHA and VA loans. Conventional is sort of your gold standard loan program. Sellers like this because there's less for them to do in terms of potential repairs to the property. And also, conventional loans typically require a little bit higher credit score, a little lower debt ratios. So there's a feeling that, hey, the buyer making the offer, if they have a conventional loan pre-qualification or pre-approval, they're going to be a little stronger. FHA is a program that is really designed for first-time buyers, but it's available to anybody. All right. And FHA tends to be a little bit more forgiving in terms of credit score and debt ratio. So it's a good starting place for a lot of people, particularly if your credit score is in the 600s. You want to look hard at FHA as a good option because sometimes the rates are better than conventional in that circumstance. VA is a program for service members and veterans. There is no down payment. It is a very attractive program and one that you definitely want to check out if you fall into that category. All right. We have community partners and first-time homebuyer grants, which I'm going to talk about in a minute. Of course, we think our rates and fees are very competitive. One thing that I do like to point out is most lenders, you start off with the loan officer and then you get passed on to a processor and then you get passed on to a closer. So you're dealing with multiple people and you're never quite sure if they know your story and what's going on with your loan. We don't do that here. The person you start dealing with handles your loan from beginning to end. And then finally, we do have some low and no down payment programs available. And I'm going to talk specifically about our no down payment mortgage. Okay, so our no down payment mortgage is for first time buyers only, primary residences only. We're going to want to verify that you've paid your rent and your other credit on time for the last 12 months. Can't make more than 150,000. The most we'll lend is 500,000. There is no private mortgage insurance, which is a very nice savings in terms of monthly payment. And you can use your gifts and grants to assist with closing costs. Now, with the no down payment mortgage, you still do have those closing costs, um, but gifts and grants can be used to cut those down. Most grant programs are going to require that you put at least $1,000 into the transaction. So if you think that you may fall into the no down payment mortgage bucket where you don't have quite enough for down payment and closing costs, this could be a good option for you. If you have the capability to put the 3 to 5% down, that's going to work out better for you in terms of rate, but this is a great option to get you in a home. All right, a couple of things that you want to keep in mind when you apply for a mortgage to make things easier for you. Don't move a lot of money around. When you give your loan officer proof of your savings, generally they're going to ask for 2 months bank statements. And anytime they see a deposit of more than 50% of your monthly income, they're going to ask you to prove where it came from. So if you keep everything very boring and don't move a lot of money around, there's a lot less paperwork for you. So just keep that in mind. Check your messages and emails frequently. There's a ticking clock when you apply for a mortgage. So you want to make sure you get to settlement without any last minute requests. And the best way to do that is to respond just as quickly as you can when you're asked for information. Keep in mind that lenders very frequently are going to take a look at your credit right before settlement. If you have to buy a new car, talk to your loan officer about it first. Don't let us say, oh, there's a new payment here. Do they still qualify? All right, so make your payments on time. Don't open new accounts. Don't shop for new credit without talking to your loan officer first. Okay. It's not that you can't open new credit. It's just that your loan officer needs to know about it so that we can build it into that loan approval process and not have any last minute glitches. And it's amazing how often people do this. Don't change jobs or retire without telling your loan officer. We're going to verify employment right before settlement. And there are a lot of instances where people have not thought to mention that they're doing that. And then, of course, all the income is different and the loan has to be reapproved. Okay. So make things easy on yourself. If you're planning something like that, just disclose it from the get-go. Okay, grant programs. Jeremy's going to talk about Live Near Your Work, which is a program available to Hopkins and a couple of other employers, but Jeremy's going to be focusing on Hopkins. There's community partners and first-time buyers grants, which I'm going to talk about. And if you're interested in buying in Baltimore City, there's also a number of Baltimore City grants that are available to you. And if you're thinking of exploring these grant programs, all of them are going to require some homeownership counseling. And that's a great place to start completing that homeownership counseling before you even go out and start looking at a home, because part of the counseling is a one-on-one individual session, and they'll be able to recommend some grant programs to you that they think that you might qualify for. All right, and keep in mind that you can combine these grants. You can get Live Near Your Work money, you can get Baltimore City grants, you can get a Community Partners grant, and add them all together. All right, so let me talk about our Community Partners grant. All right, this is an income limited grant. Okay, you can see I have that box there. And the maximum annual income is based on the earnings of everyone in your household, whether or not they're on the loan. Okay, so the folks that we see making out really well with this are single parents with children in the household because children count. Okay. On the other hand, if we have, you know, spouses living in a household and we have one on the loan and the other one's not going to be on the loan, sadly, we need to include the other person's income too. But if you fall into these buckets, this is a really nice program. The group, you get a grant of $15,000 for employees of hospitals or educational institutions and other first responders, or 12,500 if you don't fit into those categories, but you're a first-time buyer. You have to do homeownership counseling, and there's a lien on your home for 5 years, which means for 5 years, you're really not going to be able to go get a home equity or home equity line of credit or something like that without jumping through a lot of hoops. But after that 5-year period, the lien drops off and you're in great shape. All right. This program is a first come, first serve program. So the amount of money available tends to fluctuate throughout the year. Sometimes they run out of money and then they get more. Okay. But, again, if it's available when you apply, it is a very nice grant. All right, now I'm going to turn this over to Jeremy, who can go in depth on Live Near Your Work, which is an absolutely wonderful grant.
Thanks so much, Betty. Hi, everyone. Thanks for joining us today. So I'm going to talk about Live Near Your Work. As mentioned earlier, I'm a work-life program specialist in the Office of Benefits at Work Life at Johns Hopkins University, and I oversee our Live Near Your Work program. This is an employer matching program, so we partner with Baltimore City. Therefore, the rules of Baltimore City and Hopkins must be followed in order to be eligible for this grant. So a few of the requirements for the Hopkins folks who are on the call: you must be full-time benefits eligible employees of Johns Hopkins University, hospital, health system, Bayview, community physicians, and home care. There are, you can see on the bottom, the groups that are not eligible for this program at this time. The program is always expanding and we look to improve in the future, but for now, full-time benefits eligible employees. And you must be active on payroll in order to be eligible for the program. So you have to be a current active employee. The other main requirement that Betty also touched on is that you must complete a home ownership course and counseling session and receive a signed certificate before you can apply for the program. On our website, we do have a link of all of the Baltimore City approved agencies that offer this course. It's a 6-hour education course and a 2-hour one-on-one counseling session. And it has to be done by one of the approved agencies. And there's different agencies for different neighborhoods, but you can use any of the agencies that are on the list. And then the third piece of eligibility is it has to be within our designated boundaries. And I'll show you the boundary map in a little bit. We currently are only within our certain boundaries that are hyper-focused around the main Hopkins campuses of Homewood, East Baltimore, and Bayview. It is a Baltimore City matching program, so it is not eligible for Baltimore County or any of the other surrounding counties. Excuse me. A few additional rules, and more of this can be found on our website, and the link is up there as well. And I know that information will be shared after the presentation so that you can access that also. I have a pre-recorded webinar also on the website that goes over all of the rules of the program and the steps to apply in a little bit more detail if you're interested. So the home that you're purchasing must be your primary residence. Excuse me. And the grants that you receive can only be used towards down payment and closing costs. You must contribute $1,000 of your own money towards the purchase. The purchase must be financed with a mortgage loan. No cash sales are accepted. There's also a list of a few other things on the website that would make you ineligible. So it's just important to read through all the information before you apply. And then once you've completed your Hopkins application for Live Near Work, you then also have to complete the Baltimore City application, and that has to be approved before we can begin the grant payment process on our end. Oops, hold on. There we go. So as mentioned, there's our boundaries right there. Again, on our website, there's a link to this boundary map, and you can actually click in the search bar and type in any address that you are interested in looking at or purchasing or considering, and it will show you where on our map it falls. And if it falls within the boundaries, then great, you're eligible to apply for the program. So the blue shaded areas are going to be the main Hopkins Baltimore campuses. The green is going to be the Homewood Community Partners Initiative, and then the East Baltimore Eager Park areas, which are our highest grant amounts because they are closest to the campuses. The orange are our Remington and Waverly areas, which for Hopkins University folks only, it's a little bit higher of a grant amount. And then all the other non-shaded areas within that dark purple boundary are going to be the $5,000 amount. And that grant amount includes the city grant of $2,500 that accompanies the Hopkins grant. And just a quick breakdown of the boundaries and the grant amounts. So the Hopkins grant is taxed, which is important to remember. So you're going to see the gross amount of the Hopkins grant and then the estimated net, which is based on an individualized tax calculation that I conduct for each application. And then the city grant is not taxed, and so that will remain the same at $2,500, and you can get an idea of your total cash to close in that final column. And the grant amount is going to depend on the boundary and where you fall within that boundary map. Okay. And just a quick note, there are a few, like I mentioned on the website, there's a ton more information. The Hopkins grant is processed as direct deposit through payroll, which is why you must be an active employee in order to be eligible. The Baltimore City grant, however, is a paper check that must be picked up from their office by your title company on settlement. And so that unfortunately can take 10 to 15 days from the time you're approved for it to be ready for pickup. So we do recommend, if at all possible, applying for Live Near Work grant at least 30 days in advance of your settlement, just to make sure that you can get all of your paperwork and application steps done so that you can receive the most amount of money when you're going to closing. So there's my contact information on the screen, which again will be shared. And I am now going to turn it over to Gabriel Dutton.
Jeremy, thank you. Thank you so much. And I really appreciate you all taking the time to learn this and new. It might be review for some of you, but like, get some valuable information from us regarding the process. I am here as your local expert agent. I've been licensed full-time agent in the metropolitan area since 2016, helping folks buy and sell. And my mission is to give you a good overview of what to expect in the process and working with an agent, and some of the things that you should certainly keep in mind going into today's market. The real estate agent is really a person that should be your kind of go-to, maybe first stop for all of your questions. We're connected with your local community experts, your lender, anyone you could think about in the process. So having someone that you can trust is extremely important for your success in your purchase. And also selecting a fiduciary, someone who has your best interest in mind throughout the process. Many folks don't know that, if you don't have an agreement with an agent, technically that agent, any agent, works for the seller of a property. So someone to really just be your support and be in your corner in every aspect is huge throughout the process. So the first step in like kind of taking off in this is setting up a consultation with the agent. And a lot of folks happen, okay, well, what happens in a consultation? The first thing is review the basics of the purchase process, and that's generally have a general conversation about like what you need. And we really help you balance price, location, condition, amenities, and what you're looking for in your new living space. Then we go into assisting you with your timeline when you need or you may want to move to your new space, and being very conscious of market conditions, how properties, how long properties stay on the market, what they sell for currently is something that you should certainly be aware of, just being an educated buyer. Next, if this hasn't already occurred, a lot of time it has, but assist you with getting pre-qualified, like really getting clear on the financials. Betty is your awesome resource for that. And like she mentioned before, having some clarity regarding, what's comfortable and in your budget really sets you up for success throughout the process. And the next, going into a little bit about the market that you're entering into. The DMV area is vast. Real estate consists of many hyper local markets. The market in Baltimore City is very different from the market in Harwood County, Harford County, wherever you may be looking in this kind of DMV area. But generally, just to let you know, we're in a seller's market. There is a shortage of inventory. You may have heard stories from friends, family members that are actively looking in the market. So just having that information with you when we strategize for presenting, best offers and terms, um, obviously that work primarily with your goals, but will also be competitive in the space that you're working in. Um, the market isn't quite as active in terms of number of transactions as a few years ago. Depending on where you're looking, you may be able to negotiate seller concessions or other items that are not typical for more competitive spaces. But we really go over that in the buyer consultation and needs analysis to set you up for success in that way. But again, generally, we're still looking at a significant shortage of inventory, which reflects in the amount of transactions that are done in our DMV area, and then also effectively prices are increasing pretty consistently, not to the tune of what they were probably 2 or 3 years ago, but they are still steady rising. So that's just something to consistently be aware of when you're strategizing for your move. One thing that we really go over and spend time on in the consultation is the value of an agent in the contract phase. So again, a fiduciary is very important. Your agent is your advocate. You sign that agreement to have exclusive representation. They are making sure that your needs are being met, your best interest is being considered with your offer, and also negotiations within the process. The agent explains the offer acceptance process down to counter offers and even possibly rejections, which we don't want to hear, but setting you up in that way. Also, we're here to structure terms for you that makes sense for your long-term goals, really checks your boxes, and also gives you, a great shot at winning a property in competitive scenarios. And kind of touching on competitive scenarios, it's not unusual in this market to be in multiple offer situations, meaning that you and several other qualified buyers have expressed interest in a particular property. So setting you up there, letting you know what you should expect and best ways to structure an offer, for success. And success is different, for each buyer, but really what's most important to you and check your boxes. Also, throughout this process of an offer, the agent helps you to gain clarity on what an offer looks like for you financially as well. We really partner with Betty to give you clarity on, okay, well, you had that conversation with Betty about what the offer amount is, your closing costs, your monthly payment, potentially how HOA fees impact those numbers. Again, the agent is really like a jack of all trades in this part of the process, giving you clarity and answering many general questions. Of course, specifically, we'll have to, refer back to Betty with some of those, but generally should have a really good understanding of the financials pertaining to your particular purchase as well. Okay. Next, which is really, really important after the excitement of an accepted offer, contract to settlement, how you matriculate through to, closing on your new home, is really a responsibility, again, of your fiduciary to help you through that process and navigate the contingencies and setting up home inspections and everything after settlement as well. So first off, we coordinate home inspections, which is a huge part of the process. You fall in love with the home when you're in it for about, 30 minutes, maybe an hour sometime, first or second showing. But you really, have a feeling about a home after your home inspection when we hire a neutral third party to give you their professional assessment of the condition of your home. So we help you coordinate with that third party, as well as give you our 2 cents based on, past experience about things you should be aware of throughout that process. We also arrange for reinspection if a scenario occurs where a seller agrees to make repairs. We coordinate with your, selected professional to get back in the property to make sure certain things were done, in a good workmanlike manner and really to an acceptable condition. Um, we also help with other contingencies associated with the contract, such as condo documents, making sure you get those. Those are documents that give you rules and regulations and just expectations when you live in certain communities. All communities don't have, associations, but the ones that do, it's very important to know kind of what you're getting into in that regard. There's usually a contingency wrapped around your review of those documents, and we do that together. Um, After that, we also help with pre-settlement walkthroughs. And that is pretty much the last time that you'll see the home before you take ownership, making sure that you're receiving the property with all the negotiated repairs or items still intact, and really feeling confident and excited before you move on to settlement. And then we also give you a full expectation of what settlement looks like when we sit down with the title attorney that you select to perform settlement, which goes over a lot of what you've done already in the process with your lender signing loan applications and so forth. Um, but really giving you an expectation of what's to come at that closing time frame. So the value of an agent in contract, meaning once you have an accepted offer to closing, is very critical because that'll set you up for what you really started this for your settlement. Um, so want to go back a little bit and talk about strong offers in this competitive environment. And again, real estate is hyper local, so a strong offer could be very different for someone, looking in Baltimore City, looking in Howard County, Harford County. But these are just general set of kind of terms and things that seller would consider as strong when looking at an offer. So for first-time home buyers, if someone can purchase in cash, which is not always the case, that's very strong. However, if you're not purchasing with cash, then you certainly want a strong lender letter for Betty showing their confidence in your ability to make a purchase at a certain price. Larger down payments also gives sellers a little more perceived security in terms of financial quality. A conventional loan, which Betty touched on earlier, is in a way like a gold standard in terms of the type of financing that a seller would like to see. Typically, that borrower has more savings, more of ability to put down, higher down payments. Again, this is very situational. Strong offers can be different depending on where you're looking and what a borrower is looking to purchase. Also, no closing assistance, a borrower being able to pay for or have their closing costs associated with making the purchase covered by their own funds or grant funds. That's also very strong and attractive to a seller. Also, uh, inspection contingency timeframes, having those as tight as possible. Obviously, your comfort, your confidence is most important, but having contingencies in place and executed timely gives confidence to the seller to know that, hey, if there's something that needs to come up, or negotiations that need to happen, it'll happen earlier in the process versus being drug out later, where they're more so looking to wrap things up, as well as you as a purchaser. So that's from the first time home buyer perspective, what would be considered a strong offer. Move up buyers, meaning someone that maybe already owns real estate and are looking to purchase another property larger, downsize. A strong offers are considered, with cash. It doesn't always have to be cash. Loans with higher down payments are also very, 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 very favored in those scenarios. Having your home sold or under contract. And that really means there's minimizing a contingency there, not having to sell your property prior to or procure a buyer prior to going under contract with your new purchase is something that a seller always welcomes. Again, also ability to pay your own closing costs and conventional loans are also very much desired from a seller's perspective. Okay.
Okay,
Um,
Gabe, there's a couple of questions that came in through the chat, and I know you've been talking, so you haven't had the opportunity to see them.
sure, sure.
So the first one is, are all realtors fiduciaries, or is that something that the buyer should ask?
Sure, absolutely, absolutely. So realtors, they can be your fiduciary if you feel comfortable and confident enough with signing an exclusive representation agreement with them. And that means that that realtor is representing you exclusively in the purchase of your property. If you do not sign, an exclusive representation agreement with an agent, and you say, hey, Mr. Agent, can you take me to, see 123 Main Street? And then it turns out you love it. You want to put an offer on it, but you have not signed that agreement. Technically, that agent works for the seller. Now, they have a responsibility ethically to present you with client level service. However, they still represent the seller and can share any information that you disclose to them with that seller or that agent. So I think it's very, very important to link with the realtor that you absolutely trust, and you feel confident in their ability to negotiate on your behalf and their knowledge of the market. That way, you can have someone in your corner representing you exclusively and not working for the seller and potentially sharing with the seller or the seller's agent information that works in their benefit in their negotiations.
And then the other question is the buyer responsible for issues with a house that fails an inspection?
Sure, that's a really good question, and I get that often. Folks ask me about an inspection that fails or passes. Technically, a home does not fail a home inspection or pass a home inspection. During that process, you're looking to get condition in that moment. Now, what's acceptable for one buyer may be unacceptable for another. So, with your agent, you will discuss items deficiencies, and most homes have deficiencies that you would like to negotiate some resolution regarding. So you can, for example, an HVAC system is not functioning properly. One buyer may say, "Hey, that's a big problem for me. I do not want to move forward with this type of purchase with a system in that condition." And one a solution may be to request repairs in lieu of that, in lieu of that system being repaired, or move forward without it. So some buyers may be okay, well, hey, if a person gives me $2,500, I'll save that towards purchasing my own system. So kind of to bring this back and answer your question, a buyer is responsible for what's negotiated, but you do, with a contract, with a home inspection contingency, have the ability to negotiate repairs. And your agent, again, your fiduciary, helps you present a request that really represents, your best interest and what you feel most comfortable with.
All right. Debbie, you want to finish us off here?
Yes, I sure will. Well, thank you so much, Gabe, Betty, and Jeremy. I think it was very informative. And as you can see on the last slide, they have all of our expert speakers' information. If you need further contact, need to ask them a question or need to get in contact with them, you'll be able to do that. I will be sending out these slides in an email. And as promised, we also have the recording. I would say that should be available at the beginning of next week. So you will see information from me regarding that recording. So with that being said, thank you so much for joining us today. And as always, thank you for, I think most of you are Johns Hopkins Federal Credit Union members. Thank you so much for your membership. And definitely give us a call or contact us if you have any questions at all. Thank you so much.